Hey everybody, it's Wednesday, July 23rd, 2025. Today's episode begins with our headline, Altcoins lead the Euphoric Mania, Ponzi Scheme in full swing. How much money is in altcoins? In other words, everything except for Bitcoin when it comes to cryptocurrency. You take a look at Total 2 in TradingView to see the total market cap, currently at 1.44 trillion, and it's been rising to very high highs, I'm going to say. Not quite, though, above the highs of 2021, interestingly. So, as I often say, as big as bubbles can get, they can actually get bigger. But this is frightening. This is a lot of perceived wealth out there that people are looking in their apps and then their crypto wallets, and the amount of money they see in there, they think that that's how much money they have. And if that falls apart, that degrading wealth effect can have massive effects in markets. Now today, interestingly, specifically today, we had actually a large drop in Total 2, dropping by 6%, engulfing many previous trading days after going on a pretty euphoric run, looking eerily similar to the top in December of 2024, where you had going up and then these minor breaks before you had this engulfing large candle to the downside before continuing in a bearish trend. So is today's candle the end of this euphoric swing? What do you think? All I can say is when people are making more money in fartcoin than they are in traditional stocks and bonds, it's like, watch out, guys, watch out. It's been a while since my last episode, so we're going to go back to talking about Monday economic data, the LEI, the leading economic index, falling at a faster rate, all while stocks are still at all-time highs. Every month when this is released, I bring it up on my show. It's the LEI released by the conference board. The blue line here, let me zoom in a little bit for you guys. When it goes down, it typically means that the black line, the coincident economic index, follows it. And when the coincident index goes down, that means we are actually in a recession. So while the leading economic index has been falling for years at this point, and seeming to accelerate to the downside. You know, we were wondering several months ago if we were pausing here, maybe finding a bottom, maybe going back up. That could give a case to the idea that there isn't a recession coming, but as it stands, it sure looks pretty bad. The headline, the main point that the conference board is putting out there, congregating all their data together, they say a strong rally in stock prices was not enough to offset negative impacts from weak consumer confidence and new orders. In other words, the stock market went up, but that wasn't enough to make the blue line stop dropping because of consumer expectations being so bad and new orders. They also say the LEI's weak growth rate and diffusion index over the past 6 months triggered the recession signal for the third consecutive month in June. That's when this line turns red, and that's what the recession signal is. The black line, when that happens, it's like, oh, there's a warning there. We're warning here. But when it's red, it's like, uh-oh, recession. You can see in the .com bust, it was red during that whole period, during the Great Financial Crisis. It was red during that whole period. Since mid-2022, it's been red. And then it was black and it was red again. And we were thinking, hey, maybe there's no recession after all. And we're back into red. Look how long this red bar is, by the way. I mean, heck, maybe this is the recession. Maybe historians will look back on the early 2020s as, the not recession that lasted, however long. You'll be hard pressed to find anyone that thinks prices are fair right now compared to wages, as one of the primary examples of what's going on in the economy. But the main part of all of this is either when is the black line going to start following the blue line, as it has done every single time previously, or when will the blue line stop going down? Also, imagine a scenario where these non-financial components are showing just as much weakness or more weakness, and then we start getting negative returns in the stock market to add to the blue line going down even steeper. I think we're headed into a train wreck very, very soon, but again, just me and my crystal ball. Just to go back a headline to explain Ponzi scheme in full swing, if you've been following the show for a while and you've gone to my website and check out my material, especially regarding Cape-Shiller ratio and the dividend currently on the S&P 500 never being lower, except for right before the dot-com crash. Well, I just basically spelled it out. When you have to rely on people bidding a price higher and higher and higher without much backing it, without, proper amounts of, earnings that a company needs to make in order for its value to make any kind of sense to any business person. It's not just crypto that I see as being a Ponzi scheme. At this point, it's a lot of the stock market. Not all stocks are insanely overvalued. Google, in fact, has a trailing 12-month PE ratio of only 21 right now, which is still a little higher than ideal, but it's not 150. Anyway, I digress. We're going to move on. Community topics. 1,000 subscribers. I'm going to say it's official. As I'm recording, I think it's at 999. It's so funny how it's been staying there. I think you guys are messing with me. Every time it goes to 1,000, you get out. If it goes too low, you get back in. I don't know. But the point is, I had 1,000 subscribers for enough hours for YouTube to send me the email that says, hey, congratulations, you're a part of the 1,000 subscriber club with the benefits forthcoming. So again, just big thank you to all of you watching and subscribed to my channel and supporting me on this very fun game that I love to play, dealing with the valuations of securities. Coming up, tariff updates. We had a very recent one on Japan. It helped out my Nissan stock, if you know my portfolio. I do want to remind everybody that August 1st is right around the corner, and that's when the unpause button is supposed to happen. And if it's anything like Liberation Day on August 2nd, the market dropped 20% the last time we did this, so hold on to your hats, all while the VIX is below 16 right now, and sort of alarm bell, complacent mode, really, options are only this cheap right now? I don't know about that, but anyway, I digress again. Coming up, we also have tomorrow PMIs and the weekly jobless claims. Last week's initial jobless claims were not high. They were lower than expected, but the main one I'm taking a look at is continuing claims. Is it going to stay elevated and continue even higher? Some people are worried about once we get to that 2 million psychological number, if business owners are going to start looking at that and saying, I'm not so sure, we can afford to keep hiring people while people have less money to spend on things. We'll see what all happens moving forward with that. As always, thank you for watching, subscribing, commenting, and supporting the Robschild channel. All greatly appreciated. No changes to the daily reminders macro view. Click on my website and read through these if you're not familiar with them. Extremely important things to be thinking about on a daily basis, not a once in a while basis in my strong estimation. My crystal ball readings remain the same, and my Robschild portfolio is the same. No updates. So let's dive into the charts, starting with SPX, the S&P 500 going up 0.78% today, closing at a new all-time high in the S&P 500. Can you believe it? If this combines with any kind of earnings compression, as is highly expected, especially with the tariffs going on, imagine the fallout of the price. Especially if that leads to price earnings contraction. Imagine if we get down to a historic low PE ratio of the S&P 500 dropping to 5 instead of 40, while earnings are smaller. That implies a larger than 85% down move in the S&P 500. just so everybody is on the same page. But this is just a daily video. I'm not trying to explain my whole website right now. I wanted to bring up SMH today, the semiconductor index. This can act and often does act as a leading indicator to the S&P 500. Like this moves and then the S&P 500 moves. And interestingly, we had a peak on Friday, and this week we've been actually moving down. Texas Instruments, for example, had not as great earnings as expected. That stock dropped a lot. It may have given more fear to the semiconductor industry overall. Wall Street adage, follow the semis, for many reasons. As I mentioned earlier in the video, the VIX dropped below 16 today, 15.36 now. Haven't seen it this low since February of 2025. Towards the end of February there. And on top of it, the VVIX, which is the VIX of the VIX, it's like the expected volatility of the VIX itself. While not in exactly complacent mode yet, it's been dropping, and it is quite low. It's near the complacent zone. Next, I want to bring up TNX, the 10-year Treasury note yield. Better traders, chart readers than myself are observing this wedge that is getting tighter here, and it's expected that when we break out, it will be a large breakout, and it's not really determined whether we will be breaking out to the upside or to the downside. My personal guess is to the downside, but we'll see. Credit spreads tightening once again. I believe it's 2.9 right now. Anything below 3% in junk bond credit spreads is, it's a little, complacent is the word, So, proud of one's accomplishments. Like, yeah, for sure they'll pay us back. The economy's booming. Everybody's doing great. Like, that's what the credit market is saying here. So on one hand, it can send stocks higher because zero risk is perceived. As long as the stock market keeps going up, I mean, why not? As long as crypto keeps going up, as long as, mom and pop's shop keeps buying fart coin and can say, hey, yeah, we can easily pay you back. Our fart coin tripled over the last year. Like, I mean, while the music's playing, stuff can keep going up, but it's also sort of a warning, like, the music's going to turn off at some point, but we'll see. Next chart I want to show is TIP divided by IEF to show inflation expectations. We won't bother with that one today. Let's just take a look at the 10-year break-even rate itself. It's past 5 right now. So dropped pretty good today, back down to 2.37. I noted pretty recently that we eclipsed this previous high, but previously we were sort of in this lower low, lower high situation, and on Thursday of last week that became no longer true at all. We went above March's high of 2.39, but since then we've backed off. And the thing that I've been saying on many shows that I'm going to continue to say is that how can we possibly expect a rate cut next month in August if the stock market's at an all-time high? Why would we cut? What is the point of cutting? If unemployment is not spiking, the labor market is stable, inflation is not down to their target, why are we so confident that we're going to cut? It's not going to happen until it happens. It's not going to happen. That LEI, just because everybody is worried, it doesn't mean that things are. It doesn't mean things are actually falling apart. It means people think they're going to fall apart, and a lot of times, most of the time, that ends up playing out true just because of people's sentiment. When you have the overall public closing their purses and saying, I'm not spending as much money right now because I don't believe things are going to be good looking forward, it snowballs on itself, where corporations can't sell as many goods and services, so they can't hire as many people, so they have to lay people off. You have that snowball effect of unemployment going up. And then that's when the Fed actually has to step in and cut. And it's, I don't even know what to think of it. Is it just too clear that things are going to fall apart, so therefore they're not going to fall apart? Are too many people on the side of the boat that the economy is going to fall apart, so then it just won't? It's all in the stars. Main point, I digress greatly in this episode. Sorry about that. Main point here is I was very curious last Thursday. Hey, this 10-year inflation rate is spiking. And right now, just from like a chart standpoint, it's sort of a blow off top, right? We went straight up and now we're going straight back down. So no need to ring the alarm bell right now for a further Fed hike. But even taking a cut off the table can function as a hike as well. Anyway, there's 0% chance of a cut this month right now. And it's most likely we do get a cut next month for whatever reason. See how it all pans out. Next, Bitcoin. We haven't had a weekly close above the first weekly high, which means the bulls on a weekly basis are not in control, even though we are above this orange line. And not only that, on a daily basis, because of this topping tail, all these consolidating candles are functioning as a bear flag. And so I believe that the bears are in control. This is why I'm still short Bitcoin currently. If we get a Sunday night close above the top of Monday, the July 14th's wick, above, again, 123,236, that's when the bulls can take Bitcoin higher. For now, we're stuck just chopping sideways, and it's expected to go lower for the moment by chartists. DXY is next, playing around in the fun zone. It's interesting, right? We broke below it, we broke above it, and now we're sort of dropping back below it a little bit. I don't know where the dollar's going from here. It doesn't look super bearish to me like everybody keeps saying. I could be wrong. We'll see. Next, copper with a PhD in economics. I was really wondering if 2 Fridays ago the breakout to the upside was going to be a fake out. It did not turn out to be a fake out. Copper has been rising. I don't think it's going to continue higher just because of the shadow you see, or candle on July 8th peaking out. Let's see, the high 587, and today's close was not above that. So with such a big shadow here, that psychologically that's like, okay, I'm gonna take my profits now. It's gonna be hard to really sustain above that level because of how much investors were beaten down on that day, but we'll see how it moves forward. KWEB, Chinese internet stocks, Amazon and all of that, but of China, is in this fund. I love this fund. It's one of my largest holdings still. I've been talking about, ever when we were in this wedge, I said, hey, I think we're going to break out to the upside, and I am thinking about selling around 37.73 when we get there, not if we get there. I was very confident about it, and I've been proven to be right, almost. I mean, heck, we've been going straight towards that. Today, this fund going up by 1.79%. My plan right now is to at least reduce my position in this to a 10% position, just because I don't want more than 10% of my portfolio to be in China. I don't want more exposure than that. So as long as it goes above that, I'll chop it down to 10, and I can always buy in more later if we get down lower again. That's sort of my thought process. But again, this price here is a trailing 12-month PE ratio of 20. One of the things that is affecting my ideas of, hey, maybe I should be selling out of REMX, maybe I should be selling out of China here. It has to do largely with the altcoins, just because of how much speculation is going into markets. You know, once the music stops playing, once the tide starts going out, all ships tend to drop, you know, in the water. But anyway, I digress for the 20th time in this show. I have two more charts to share with you today. Silver going up a lot. I've heard people talking about the $39 level. We might be here at a peak, short-term peak at least, in silver. Just wanted to point that out. I don't know what to think of it. And then the last chart of today is utilities, also basically at an all-time high. You know, while many people get excited about tech stocks, about Tesla, about Robinhood, DraftKings, Apple, Microsoft, Google, Meta, utilities is also at a all-time high here. And oftentimes when money goes into utilities, it's like, it's a little bit of a warning shot. It means that, you know, professionals out there that aren't part of the mainstream, like manic, like buy the hot popular stocks, when these are getting a bid, it tells me institutions, smarter money is starting to go into what's considered to be safer areas. Utilities are never going to be hot stocks. Well, I guess they can be, right? The Enron thing. But they're not right now. That's the point. They're considered to be defensive for now. And they've been getting a bid, which, again, it tells me that some of the smarter money out there is sort of rotating out of the extreme high valuations of many tech stocks and going into some more safety, or perceived safety. Again, in recessions, utilities sell off too, because everything sells off because it's a run for cash, because everybody needs the cash to, you know, pay off their debts to the bondholders, because bond lives matter. But anyway, that's all for today's show. I hope you enjoyed. Thank you for subscribing to the channel. This was a huge goalpost for me, and you guys carried me there on your backs with hitting that subscribe button, and here we are. Thank you so much. That's all for today's show. Thank you for watching, and see you next time. Robschild.